Aloha, everyone. Happy Halloween. Overall, the stock market had a pretty solid session on Friday despite the pullback. The reason being is that even though it was a technical distribution day, overall, we are still up on the week, as you can see on the NASDAQ, up 0.44%. And even though it was a technical distribution day, volume was not heavier than the big up day that we saw on Wednesday. So we're still holding above the open 50-40, and as long as we're doing that, I'm okay with it. It's obviously not going to be perfect. In fact, the backing and filling is healthy. The Russell 2000, same similar situation. What I like to see is that it actually did not lead to the downside, so it showed slight relative strength to the overall market today. The S&P 500 led the way down 0.48%. So once again, pretty good. Volume was above average on that index, but it's not significantly, but it's firmly above the 200-day moving average. So there's nothing to really worry about here. But we are in that big price trading range congestion zone, June, July, August before we broke down. So we're kind of in that area where it's going to be a tough resistance. But if we are going to continue to go higher, we'll probably back and fill here. The strongest stocks will show outperformance via their relative strength line, and we'll have leaders. Hopefully, after earnings season's over, we'll be in the clear. But for right now, we still do have that overhead resistance. But on a short term, the market still looks good despite the technical distribution day on Friday. Overall, everything looks solid short term, but those resistance levels are going to come into play. And also, don't forget the Russell 2000 is still significantly below its 200-day moving average, but the move on Wednesday showed that it's ready to play with the rest of the market. So it's a good sign. So we're not out of the woods yet. Still looks good, but it's not great. It's not great at all, in fact. But I tell you what, it is good to see some leadership out there, but mainly it's in big cap stocks and some defensive like food stocks, like AGRO gapped up, missed my limit of 922. Um, Next day, pulled back to 944, missing my limit of 942, and then boom, there it goes. But besides food and big cap tech stocks, I really don't see a whole lot of clearly obvious leadership with beautiful chart patterns, but there's still some nice signals out there. But unfortunately, we've got to deal with earnings, and that kind of takes us to where we are at tonight with our new long positions. We actually have quite a few, but they're all speculative. So let's go and just start out with the speculative ones. ONP is the most dangerous one, the one I recommend nobody else trade. Me, I don't care. I'm going to go ahead and show it. Earnings, I believe, are on Tuesday, but it's going to be such a tiny position. I don't think I'm going to worry about it. It's only going to be 0.5% of my account capital. Remember, I'm a systematic trader. I don't need to babysit these positions. Sell stops are set on everything, so if it doesn't work, not a big deal. So while we're starting to have a whole lot of long positions in our portfolio again, it's not tough for me. Intraday day trading wise, I focus on about 1 to 2 to 3 stocks, 4 or 5 at most. But on an end of day basis, my preferred method would have 5 long positions, making up 20% of my capital in each, in the perfect beginning of a bull market rally. However, at the same time, I can also hold 100 long positions at 1% each. Either way, I get affected the same way. I can handle it. I got plenty of time to manage my positions on an end-of-day basis out here on Maui, so it's no big deal. But ONP is the most dangerous one. Very, very thin. Earnings on Tuesday. I don't really recommend it. Then there's NEO. NEO is an earnings winner, so it has that for it. It was in my Max Green BOP for 5 days scan, so that's where it was kind of triggered. But because it's an earnings winner, and really it's in the BOP scan but not confirmed price volume BOP scan, which is what I would like to do, or have a pocket pivot point signal here, we're going to keep this only at 1%, even though it's a earnings winner. Just going to keep it small here because this isn't a clearly convincing move that it's ready to break out, but seems like a low risk area to enter if it does break out. And then CLLS is another one. Not quite sure where earnings are. Not really too worried about it. Not going to risk much for long. It's a stock that can gap, but I have a feeling it's going to be in my favor if it does go one way or the other. But whatever. Not sure when earnings are, at all on this one, but it's a good, solid, long position. Back-to-back pocket pivot point signal sessions. Heavy volume both of those days. BOP has increased to a higher green BOP level each of those 2 days, so pretty solid. First, sell stops right below these lows. Last one's right down here, so not going to risk much if we're wrong. And then the final speculative position is UEPS. It has earnings on the 5th. This is an ex-canceling quality stock, so it's pretty decent, but still technically it's not anymore, so it's speculative. And since the earnings are on the 5th, we're just going to go ahead and keep it small here too, since it was only in my canceling scan as I haven't re-updated it, because if it wasn't in that one, then it would have just been in my green BOP scan. It looks for any stock up on the day, any stock up period with green BOP, and that's just it. And it's only a scan I really only go over if there's not a whole lot of names in the other scans, and or on the weekend, and it happened to be the weekend, so I went through the scan. So that's where this one would have only have been found if not for it being XCAN Slim. So we'll keep it at 1%. I like the pattern, but you know, may or may not work with earnings. It's kind of a crapshoot, so keep it small. And then the only high quality long position this weekend is actually a perfect speculator scan quality name, so it's extremely high quality. It will be a future CAN Slim quality names as earnings growth is. Do I have my Market Smith open? Yes, I do. So let's go look at CTRP. Perfect speculator name, but look at the sales growth the past 8 quarters. Absolutely huge, and it's picking up the past 2 quarters. Earnings growth, as you can see, has finally gone positive, up 85% the most recent quarter. And look at 2016 estimates. They expect a 573% gain overall in earnings. And as you can see, mutual fund ownership is starting to grow. And with gap up, small consolidation, and a resumption of the uptrend today, or on Friday, on heavy volume with green BOP slightly increasing from the day before. That's a good signal right there. So perfect speculator scam, 2%. It was also confirmed in my new 52-week high scam and in my price volume BOP surge scam. So overall 1% for both of those. So it's a total of a 4% long position in CTRP. And then there's only one sell on an end-of-day basis, and it's the XCAN Slim quality long, which is no longer CAN Slim quality name. BFIN, closing below its 50-day moving average, even on lighter volume, still technically 50% sell signal. I won't be selling any on that, but my final sell stop is at 12.15. So if it hits 12.14, I'll be completely taken out of this. And then let's see, is there anything else? Yeah, I was thinking about setting buy stops on QUNR. Would really not like it to break out now. I would like to only set my buy stops if I can get it to at least consolidate for a couple of days. I would really, man, like, at least a week of consolidation. I just don't think I'm going to get it, but buy stops would be just right above the 50-54 level. So 50-55, I'd get long QUNR, but I'm not setting them just yet. I need it to base out for just a little bit more. And then once again, the one missed and only good short sell this entire downtrend that we had. I missed the signal, and now look at it. It fell another 13% on Friday. Shares were available to IB. Had the order on, just never executed it. It's pretty unbelievable. It's actually pretty comical, and it's probably because I'm so not used to taking short positions on an end-of-day basis anymore. But since October 13th to October 30th, down 63%. Beautiful. Too bad I screwed that up, but hopefully you guys didn't. But anyway, so overall, market still looks good. Doesn't look great. Of course, we're in the land of price consolidation range zone, so it's going to probably be some backing and filling, but that would be healthy. That would create better consolidation patterns for potential future breakouts, and hopefully get us some more of those green BOP setup charts, because I tell you what, it'd be nice to get a whole bunch of this kind of action showing up in the market. That would get me a lot more bullish than where I currently am, which is kind of neutral, slightly bullish, but ready for the market to potentially reverse. But that's how we've been trading basically for the entire year anyway, before even the big downtrend in August. So nothing new. Same old, same old. Just keeps on keeping on, and probably will stay that way until interest rates actually start to rise.